Well, I'm thrilled to introduce our professionals who are going to be sharing a variety of practices today. Discussing the ways to adapt to our current business environment is Garth. He is a graduate of Texas A&M and UT. He is the owner of 2 local pharmacies you probably know, M&S and Stripling's, as well as 6 others in and around Texas. And if that wasn't enough, he's also started 10 healthcare and real estate businesses. Please help me welcome our 3 panelists.
There we go. So I knew we'd be following Ronnie. He's going to teach you how to run a bank. That's pretty complex. And so I'm an Aggie, and so I'm going to do what I know, which is keep it simple. So if you've been running a business very long, you've been overwhelmed. That's just the way that it works. You got employees oftentimes. You got Ronnie asking for what's your debt coverage ratio and everything else. You're trying to make ends meet. So you got inventory and growth, all my cute little animations here. Sometimes it can make you want to pull out your hair. But what I want to bring it back to, let's Aggiefy this thing. Really, there's only 2 things you can do to fix a bad business or fix a problematic business. You either increase revenue or you cut costs. That's it. That is literally it. And so when I find myself a little overwhelmed, you kind of get in the weeds of trying to pull certain levers and make certain things happen, take a step back. If I can leave you walking out with a little bit more peace than you had coming in, and then with a few really specific things that you can take for your business and generate some extra cash flow, then that will be a win for this Aggie. And Longhorn if you hope for that. So on the increased revenue side, keep it really simple as you can. First of all, delegate and elevate. Who knows your business as well as you do? I hope no one. If you know your business, if Jim knows his insurance, I don't know it nearly as well as he does. Same thing with RJ or anybody else. You should know your business really, really well, so you should also care about it more than everybody else. And if that's the case, who can sell your business or your services or your products better than you? I hope nobody. You should know it that well and care about it that much. Otherwise, do something else. Go find another business or go get a job or do something else. Next is, what are you doing that you could delegate and elevate? It is really, really easy when you feel overwhelmed and anxious to pour yourself into things that really aren't making you any money and are not progressing your business. It can be really, really difficult to try to take in all that information and do something productive. And I find with myself, all of a sudden I'm cleaning up my desktop. I don't clean my office really at all unless I've got a lot of stuff going on and I find myself a little bit tight. And all of a sudden, I find this compulsion to clean my once a year or something.
Yeah, it's true.
So next thing, this is super tiny, so I think it's probably on your printouts. Okay, good. Know your numbers. If you ever watch Shark Tank, this is what they bark about or bite about all the time. You've got to know your numbers. It is so critical. I can't tell you the number of times that I've been in a spot where I'm chasing a sale. But let me ask you a question. If you sell $100,000 worth of whatever, services or goods, but it costs you $101,000 to produce that, you're in the hole. You just shot yourself in the foot. It is so easy to do that on both services and on actual products that you're selling. So make sure that you know what it costs you. And you got to think through some of the details there too. Like if you're a service-based business, if you're Brittany, you got to know how much labor is going into putting something together, how much labor is going into delivery. There's so many things that you need to make sure you know that on the front end. And if you know it really, really well, then it becomes like second nature, and it's not that hard. And you know going in, if I can sell XYZ for $10, I'm in it for $7, all is well. So know your numbers. Next thing on growing your revenue, something I would challenge you to do is, if you're in a line of business where there's an awful lot of competition, or people they scrutinize your prices, ask yourself, if I could do this on a larger scale, can I drop down my prices and still be profitable and make myself more competitive? And so I tried to guess what everybody here did. For whatever reason, I assumed everybody was going to be in catering or restaurants or something, but my example here, you can see, if your normal price per head or price per plate is $15, but you're competing for whatever reason in a market, call it Timpson or something smaller where it's, dadgum, it's frustrating, it's pizza or it's something far inferior, but everybody else is spending $10. If you could lower your price down to $12 and have enough volume to make it worth your while, is that a successful sale for you or is it not? So if you can drop from 15 down to 12, but have enough volume to make it worth your while, where you're combining your labor to produce what you're trying to produce, is that a good deal or not? You need to know your numbers that well. That way you can try to grow your business through volume by offering discounts. You don't want to get into slashing prices too much. That is the quickest way to see your business shut the doors. But if you're struggling to grow, it's important to ask yourself those critical, hard questions. Let's see. Next thing, just really practical questions. Sometimes it's really easy to get stuck in a channel. My typical customer is XYZ. It's a person that walks up and buys from my food truck or whatever it is. Ask yourself a question. If you are in a janitorial business or a landscaping business, ask yourself, who would do well to outsource what I do? If they're doing it internally, who would do well to outsource that? And can I step in and offer a price that makes sense for them and still yields me a positive gross profit? So just some ideas of increasing revenue. Decreasing expenses, that's really where I want to give the specific examples today, because it's a lot more practical. It's a lot less in the clouds and more tangible. So in general, you've got fixed costs and you've got your variable costs. Neither are good, neither are bad. Fixed costs are fixed, they're going to be roughly the same every single month. And so the examples I gave are like rent or your insurance, like liability insurance or health insurance. If you have salaried or full-time employees and you really can't squeeze that, then that's going to be fixed. And then same thing, loan repayments. Technically, it's just the interest is an expense, but you get what I'm saying on the cash side of things. That's the same amount going out every month. On the variable costs, like for us in pharmacy world, that's like 87% of our P&L. So if $1 comes in, 83 cents is going out the door. But if I don't sell $1 out the door, then I don't have 83 cents coming out of my pocket. So it's going to vary based on the amount of business that you do. And so you've got raw materials like for us or for Brittany as an example. You've got seasonal help, commissions that go up or down with your performance, like when you're paying those out to employees. Then you've got delivery costs and credit card fees. You get the idea here. And so what I'd push you to do is examine your fixed costs. Plenty of times I've been house rich and cash poor more times than I can count. And then I've been pharmacy rich and cash poor more times than I can count. It's not as fun as they say. It's pretty miserable when you're stuck and you need that cash, right? And so what I've had to learn to do is examine my fixed costs, asking, is there some way for me to restructure the way that we have our P&L, the expense portion of our P&L? Can I restructure some of those fixed costs when things get tight? People are pointing to different types of vocabulary like recession and the inflation. What is that going to do to our economy? As things get tight, be ready, willing, and able to examine your expenses critically and creatively to see how much can I squeeze those. And again, part of that effort is going to be try to squeeze these down into the fixed costs, down into variable costs. So first, and this is just like you would do at home, zero-based budgeting. Walk through your P&L. What are all your line item expenses? Do you really need your shoes shined 3 times a week? Ask yourself those critical questions. Is this really important? And then secondarily follow up. If the answer is yes, it is important. Ask yourself the question, is it competitive? Am I paying a competitive price for it? You can get into haggling, and she's going to be way the heck better at negotiating contracts than I will be, so I'll let her take that. But some more specific potential parts of your overhead that I would look at. Health insurance, my goodness, it is really, really expensive. Unless you work with Jim, then it's great. So. But health insurance is really expensive, but it's also really critical. It can be catastrophic financially if you don't have health insurance. Problem is, $450, $500, $600, $700 a month per person on staff, or for you and your family if you're a sole proprietor, that's really heavy. That's a really heavy burden. And so, just throwing out some examples here. One thing that I would encourage you, and again, it's convenient that you're here. One thing I'd encourage you to do is, if you've got to get creative and you're really pinched, look at some of the options that are out there. The Obamacare or ACA plans, they are subsidized really, really heavily. And so if you're, and you check with Jim for my math, but if you're between about $28,000 and $75,000, or and that's your take home, or your employees are there, one thing you could potentially do is shave off some pretty significant expenses in the way of premiums and step onto one of those plans that is fully subsidized. And so from my cute little Aggie perspective, you are importing Washington dollars and bringing them into your household. So that's one significant opportunity. If you can't do that, make sure that you are, if you're self-employed, make sure you're deducting those as an expense. So next, just an example, if you currently have a commercial space, could you possibly reduce or eliminate that commercial rent by officing out of your home? And that may or may not be an option for some of y'all. Next, debt. Some of the questions that came in early that we got to look at were, what's going to happen with inflation? What's going to happen as the Fed pulls the lever to increase the Fed funds rate? I'll spare you about 12 economics classes. It's not great. You really don't want to be stuck with variable rate debt. If you have any option, try to move from something that's variable rate that fluctuates with prime or pick your flavor. If it fluctuates, I would almost bet it's going to go up pretty significantly in the next couple of years. Everybody's got their own opinion, but they've got to pull that lever pretty hard to slow down inflation, and that's the only real lever they have. And so if your mortgage is variable rate, I would strongly encourage you, fix it right now. There's a guy. Next thing is, debt is not bad if it's for your business. If it's for your TV, I would not encourage that. The debt for your business is not bad. Like Ron talked about, you've got to be able to capitalize or fund your, what we call cash conversion cycle, your inventory and your accounts receivable, and you capitalize those either with cash that you make from your business, or you do it with accounts payable. You stretch those things out from your vendors, or you finance it. And you got a guy here for that. One thing that he mentioned that I think is so true, and I've felt the pinch of this plenty of times, banks love to sell you money when you're doing really, really well. They have an obligation to do that. They're required to do audits. And so if your business is tanking, it's not just that Ron doesn't like you, he cannot lend you money. And so there are specific boxes that you've got to fit into. And so that would be my encouragement. When times are great, go get your cash or get your line of credit, because they are happy to give it to you then. But when you're sucking wind and you're struggling, good luck. The next thing is, there is a little bit of flexibility in there though. So relationships matter. It is super important. If you do not have a relationship with a bank, it is very, very, very important for you to begin that relationship. Because what I found is, if you don't have a good relationship long-standing with a bank, they view you as a short-term, only in the short-term perspective. Same thing with vendors. Whereas if you build that relationship, they will say, you are in a pinch, RJ, it's okay. But I understand you've had a good business for 8 years, you've been banking with us for 3 years, whatever. I've seen you come out of the other side of this plenty of times. And so they'll take a little bit bigger perspective. And where there is a little bit of play and flex, they will work within that. Next is employees. If you're like us, you've got 80 or 83 cents, depending on the pharmacy, tied up in cost of goods going out the door. Almost everything else, besides rent, almost everything else is labor. And so nobody likes layoffs. That is not a fun thing to think about or ponder. But one thing I would encourage you, if you find yourself, if you can feel your line of sight kind of closing in on you a little bit because things get really, really tight, ask yourself, who is critical to this operation? Because if you've got to close your doors in a month because you didn't take actions now, then everybody loses their jobs, including you. And so it is really difficult to look at it black and white. It's really easy to kind of get pulled into the emotional side of things, but it's important to view it wisely. Some alternatives to layoffs. Is there a way within your business to shift people from a wage that's weekly, bi-weekly, monthly, however you're paying, to commission or bonus based, or to split that up somehow? If so, what that allows you to do is reduce your fixed costs every single week or every single month, and then potentially just tie them to the performance of your company. And so maybe you give them a little bit more upside, they can make a little bit more money through a commission, but it also protects you when things are hard for numerous months in a row. And then same thing, are you able to shift somebody that's in a W-2, like they're earning a wage or a salary? Can they work from home? Can they be classified by the IRS as a 1099 contract worker? If so, sometimes they can take home even more, and you save yourself some of the payroll taxes. If you're an employer, you're paying half of those payroll taxes. Are there some jobs that can be outsourced in addition to that? Next, this is my favorite one because you're basically just taking from Washington things that should already be yours. And so I'm a firm believer in being aggressive but defensible. If you can't defend it, that's a problem. Jail is not a fun place, I'd imagine. So I don't want to go there for something like here. But what I would encourage you to do is think of the tax laws as something a little bit different than perhaps what's been floated by you. Tax laws are not a punishment. Tax laws are the government's way to incentivize you to spend your money doing this or to invest your money doing this. And so if you can understand what's going on, at least the ones that are relevant to you, the tax laws that are relevant to you, you can invest or spend your money the way the government wants you to, and you're incentivized to do so. So play in those lanes. As a business owner, I will say, you have the opportunity that almost no one else has. If you are just a W-2 employee working for whomever, there's not that many things you can do. You can kick the can down the road on taxes and postpone it a little bit, but you really don't have that many levers to pull. If you're a business owner, There's all kinds of great things you can do. We're happy to talk about that over a burrito or whatever you want to do. One of those things, pay attention to the legislation that comes out. The employee tax credits, if you've been around since 2019, since the beginning, if you haven't already examined your P&Ls for this, you really should. Look at your P&L quarter by quarter by quarter by quarter from 2019 Q1 through 2021 Q4, and then compare 2019 quarter one versus 2020 quarter one, 2019 quarter one versus 2021 quarter one. And if you fell 20% or more, then you qualify. And what do you qualify for? In 2020, if you fell 20% because of COVID or whatever, or you just had a bad business quarter, if you fell 20%, then you can qualify for up to 50% of what you paid out in payroll back. In 2021, same song, second verse, except it's 70%. And there are some stipulations and details, but that's the gist of it. It's worth looking into if you haven't already. Next, real estate. This is a no-brainer for real estate, but it works for a lot of folks. If you are a sole proprietor right now, you are paying 15.3% in FICA taxes or payroll taxes. That's Social Security, Medicare. So in addition to the federal income taxes you're paying. If you are set up as a sole proprietor and you bring home about $70,000 or more, it is going to make sense. I'm not a CPA, so I can't officially give you advice, but I would strongly encourage you to look at setting up an S Corp, and ultimately what you're doing is you're separating out what your salary is that you're paying the 15.3% on, and then the profit of the company. The profit of the company is subject to federal income taxes. You're still paying on the SAM, but you're not paying the additional payroll tax of 15.3%. Super important. There are a ton, like I mentioned, if you are a business owner, there are a ton of things you can do. Fun, creative things. And so if you've got an office that is 5 or 10 or 20 miles away or whatever, and you're driving to your office, those miles are not deductible. Now, if you have a home office, and then you have another office, and you dictate this is your primary office, and then you drive to your secondary office, those miles are deductible because your home office is your home base. Your commute to work is not deductible, but when you're doing business from your office to wherever else, it is deductible. So lots of little things like that seem like they wouldn't matter that much. But when you buy a vehicle, you can write it off if certain conditions are met, and things like this will help you meet those conditions. Deduct your vehicle, deduct your business miles. Restaurants, if you take up clients to meals, and I do this regularly. I used to joke, I'd take out friends or people that I was mentoring or discipling or whatever, and I'd say, all right, business, so pharmacy's going well, have a great day. So, it is important if you ever get audited, you want to take notes and potentially jot down what you discussed. So I keep a digital calendar and I'll put tiny little notes in there. Just important if you ever get audited. Being audited is not necessarily bad. Pretty good chance that if you run your own business, at some point you will be. It is not like the Grim Reaper's coming. There's so much gray. You want to make sure that you never step past the line there. There's so many opportunities that are there for you, and there's some gray because there's interpretations of the rules. There's no need to step on the other side and to blatantly violate and not pay taxes. But that said, should you get audited, if you checked all the boxes, then you're in good shape. It's just a headache to deal with the IRS, but you can have a professional on your team that can help with that. One thing that is super helpful, my goodness, I didn't know about this until a couple years ago. When you buy a building, say a commercial building, I've gotten into this and I love it. 39.5 years is the depreciable life of a commercial building, like this one here. So this might be, let's pretend like this is a $1 million building, and the dirt is worth another 50, 80, 100,000 bucks, whatever. But $1 million building, you get to depreciate that over 39.5 years, and so you're getting what, 25-ish thousand bucks in a depreciable loss. So Ron's not going to hold that against you because remember EBITDA, you're adding back the depreciation. But when it comes to your taxes, if you've got a taxable income of, call it 100,000 bucks, it's nice. Now you have this expense that really didn't cost you anything, this 25,000 bucks. But if you know the tax law, you know that not everything in here falls into that 39.5 year category. You can do what they call a cost segregation study, and you're going to find that 300,000 or 400,000 bucks of the value of this building is windows and light fixtures and paint and chair rail molding and whatever else. And so if you accelerate that with your CPA, now you've got your $100,000 taxable income, but you've got a $400,000 loss. High five. That's when you take your accountant out for steak. Because you're not going to owe taxes that year and probably not the next year.
50% of it off,
Yeah, it's fantastic.
And we add it back so it doesn't hurt you from your financials.
He's thrilled. He's happy for you to keep that back. Section 179 depreciation, if you have Equipment and vehicles, if the vehicles meet 6,000 pounds and certain qualifications, you can write those off as tax deductions in year one. So if you are driving people around in a big Ford truck or in a big Tahoe or whatever else, and you purchase that, even if you finance it out and it's 70,000 bucks or 60,000 bucks, cars are ridiculously expensive now. You can take all that $60,000 or $70,000 and not have to write it off over 5 years, but take that whole $70,000 against your $100,000 taxable income and take big chunks out of your tax bill. So very important to at least be mindful of this. And then also something that's of note, childcare is tax deductible. And for many of us that have kids, that's a big deal. So that's my stuff. Feel free to come to me afterwards. I appreciate that it's not as brilliant as Ron's or as awesome as hers, but really practical things. If I can be of help, I'm happy to.